Trading room time, folks. Let's get into the midweek update. It's the 14th of June. First off, this is a quadruple witching and an FOMC meeting and a market that's gone gangbusters. We're in this really fun situation. Take responsibility, folks. You guys know the drill. So it's an FOMC announcement today. Okay, big deal. Quadruple witching Friday. Let's look for some volatility because it's going to happen. Now, this becomes just a conversation at this point. We'll take a look at these markets that have gone absolutely parabolic over the last few days, few weeks. It was primarily the NASDAQ. The Russells started to move higher, and then the Qs or the SPY took off, and now the diamonds actually. We'll take a look at it, but all super volatile, lots of bullishness, no recession worries at all in sentiment, and I don't think they've been recession worries much. Maybe a little bit of a hiccup in March, but it was completely cleared out as we go forward. Economic data is absolutely showing some good signs. The PCE number came in line, which means it's just parked itself at a top, but the CPI number is coming down. The PPI number is coming down. We're seeing an increase in unemployment, although we do have that high demand for employment, stuff like that. Businesses themselves are doing pretty well when it comes to higher prices as they're just kind of pinned up there. So I imagine that's keeping their bottom line going. There's still some hiring going on, but to see the services sector, and I talked about this last week, drop for the first time in a long time, that just shows that there's a little bit of retractment when it comes to the consumer when it goes to services going out. Now, the expectations for a growing economy through the summer is definitely there, and we'll take a look at the charts and a couple things that I've been noticing. But so far, the sentiment of the markets is absolutely recession-proof. They're not afraid of it. If it happens, it looks like it's going to be a short one, according to at least the sentiment. So let's get into the difficult part as of late, which is trading. And folks, I've been struggling myself personally. We've got some trades here. Airbnb, TSM, which was sideways to up, now moved to up as it broke higher. Merck and First Solar are still showing some good signs of bearish, but they're not falling apart. So if you guys took these moves, you're up a little bit if you're in the bull side, and you're pretty much flat if you're in the bear side, but not really losing anything because these things are still in some pretty good patterns. Now, I do not have them, so I've got to jump off of this, and let's go take a look at them live. How does that sound? Okay, so the first one we'll start with is A, B, and B. You can see the markets just shot out of the gates this morning. Looks like they're rolling over a little bit. We'll see where that goes. We'll talk about that here in just a second. So here's Airbnb. We talked about it on the 6th, and that was the Wednesday, and a little bit of a hiccup rollover, but look at this. Bounced right off of its 50-day moving average, and it shot up higher. So great work, guys, on this one. I think the target might have been somewhere up at the 125 area, and you're just about there. It's looking really nice. It looks really nice. So I still like it. It's a little extended. What isn't? Ha ha ha, right? So that's going to be our tagline for this class today is what isn't overextended. It doesn't mean that we can't buy it. You just really have to bite down and go for it. I'm not afraid of going bullish here. If you guys want to, it's great. Just be precise in direction or targets and very short in term. All right, so that's A, B, and B. It looks good. Here is TSM. This was a sideways to up trade. I'm going to go back to the 6 as I zoom in here. And I loved it because I believe the 6 was right here. This was our Wednesday class. I'm going Wednesday. A little bit of a rollover as well. Looked a beautiful sideways, but if you played it slightly to the upside, I guess I shouldn't say slight because that just shot right up to 105. But even a diagonal spread, you're going to do okay because look at what it did today. It hit the 110 yesterday. It came right back down just above that 105. So I moved this to the bull category for obvious reasons. It's definitely above that resistance level. Technology, semiconductor, they're all going gangbusters still. And this is a little bit slow to the party, but great call, folks. Great job on this one, as it still looks really good for sideways to up. All right, and then I've got 2 bears for you. Trust me, we'll go out and take a look at some other trades. But these are just the ones that triggered from last week. Usually we had a whole slew that carried over. It's getting a little bit more decisive. Here is the 6th, and it is a beautiful bear rally back up when we were talking about this crossover, finished strong, actually hit the target the next day, right? But it's setting itself up for another rollover here below 108. So I'm actually going to put this down as a continuation to the bear side. I'll write it down one more time. But I do like this as it breaks below the 108 level. You got a clean target here at about 105. If you believe healthcare manufacturing is going to get a little bit lower, start to slide. Complete different story from Eli Lilly. We're starting to see a little bit more selectivity. Is that a word? Well, it is now, on what people are buying when it comes to the larger companies, and we're starting to see things. Eli Lilly's got a lot of talk on Alzheimer's and Parkinson's research and things like that. Merck, you would expect to do the exact same thing or be in the same situation. It's not. It's the exact opposite. So we're starting to see selectivity when it comes to AI and research in manufacturing drugs and battery-powered anything. I'm surprised we haven't seen it push back into solar power, but we'll see where that goes. So there is very distinctive things being bought up, but they're being bought up all at once very aggressively. It's kind of hard to tell. But Merck is not participating. Let me go back again. So I'm going to keep that on our bear watch moving forward. The other one, speaking of solar power, for solar, also looks to be a little bit weak. This thing has been all over the board. Take that island gap we talked about last week. Let me zoom in and get to the 6th. It's about right there. So you can think it was already breaking that floor of $200. And look at this. It comes back up and kissed it, and it's rolled back over. So if you were bearish, sideways to down, you're sitting in a good situation here still. I still like it as another possible break below the 190. Maybe come back to this island area, 185-ish, 180 in the median. It goes back to February here. So it just depends on where your target's at. It's difficult to go bearish for too long because these markets are still in blow-off territory. I'm going to call it blow-off top territory. We're just still moving higher. The rising tide has definitely risen the SPY. It started with the Russell 2000 and actually going into the diamonds now. So everything's just really surging higher. We'll see how long that lasts. But I do like this sideways to down. Let's you know what, folks? I'm going to carry them all forward. A, B, and B. TSM is now up, and then for solar and Merck, I'll carry them forward just in case you guys have them. Yeah, let's take a look. All right. So let's go back here. This is live right now. Looks like the Dow is just slightly lower, 0.32% and 0.44. We're going to hover into that meeting for sure, and then who knows what happens. Actually, I do have a call. I'll give it to you here at the end of the class. I'm going to start making calls. Whether they're right or wrong, does it matter? No, it doesn't. But let's have it just for fun. So let's get back to our little our PowerPoint here. Let's get into the market analysis. And you can see that in 2.5 days, in light of a Fed meeting, we're bullish. SPY is late to the party, but it is up 2% in 2.5 days. Wow, right? Wow, that's pretty impressive. The NASDAQ up another 3% in 2.5 days. Russell up a little bit. Oil's dropping. Boy, it was at $69 a barrel. I haven't seen that in a while. So we'll see where that goes. And gold is just kind of parked, I imagine, waiting for what the Fed's going to do. Not a lot of action when it comes to interest rates or the dollar or even gold. Things are just kind of puttering around. So the markets seem to like it, and they're just moving higher. Let's get to our chart. I lost my mouse for a minute. There it is. So there's that spill off, or that explosion that we're waiting for. It had a beautiful parking area there, and then it's like, you know what? I'm just going to go for it. Everybody else is going for it. I'm going to go for it. Not a lot of volume on this. It just seems like everybody's out of the bull's ways as they just want to go ahead and start just biting and eating stuff up and thinking that, hey, look, if we're not going to hit a recession, you don't want to be left behind, as we could rally through the summer. We could move sideways. If numbers can come in, yeah, maybe some jobs need to be laid off and the consumer doesn't drop off the cliff or drop off the planet, right? And then we could get that soft landing, which would be ideal. This is absolutely pricing in a very soft landing and a very stable, strong economy going through the summer. I've got a couple things else we can look at. Let's take a look at the diamonds. There it is. There's that participation. Didn't really see it here. You've heard me tout over and over and over, be bearish the materials and energy and all that, and be bullish the NASDAQ. Well, guess what? This last little surge, it's not anything to do with the bulls are getting in there. It's just the bears have quit and just get out of my way. It's really just stay out of my way. And anybody who's bearish out there, any of my counter trend traders, you gotta just stay out of it this way. You gotta just sit back. Go ahead and throw some darts and buy. Go for it. I'm fine with that. But you can't fight this. I know there's not a lot behind it, right? That's the volume's low, but everything's coming off the bottom. All of my bears have gone absolutely 180. Every one of them. So I'm done trying to play the bear side here and guess tops. Let's just watch this volcano erupt or jump in it. I'm totally fine with that until it doesn't, because then all your bulls will go up against you. Timing is 90% of this business. And then the Q's just extending a little higher. Its first surge was definitely 2 weeks ago. Here's that base, and then it's just kind of participating there. Interesting how some of these bear days, I did show a little bit more excitement when it comes to I'm okay taking some profits off the table. This is a very large move. Now let me go ahead and climb one more step on my soapbox. Folks, if somebody wants to help me with these percentages here, 370 to 340, right? That's let's say 10%. Let's take 3 off of that, so that's going to be 340. 10, just under 10%. Yeah, let's go a little lower. Let's go to 330. That's about a 10% drop, right? 10%. 10% drop is a pullback. It's a bull pullback. It's not a crash. It's not a correction. It's not the end or the beginning of a new bear market. It's not the end of the world. It's a bull pullback. So yes, these things have almost overinflated themselves, these markets, to where they can absorb a massive, ugly, gross, scary 25, 30 spike in the VIX and be a bull pullback. That's where we're at. So it's going to have to be associated not only with, not with this move, but it's going to be associated with, oh no, we're not having the soft landing. Jobs are firing people. We're seeing a slowdown in expansion. We're seeing stores close. I mean, yeah, that's going to be, I doubt that'll happen, knock on wood here, right? But it will have to be a huge snowball effect for this to be nothing more than just an aggressive pullback. So, as bear as you guys want to be and as reluctant as we are, a massive, massive correction in the market is still a bull pullback. Isn't that crazy? That's why we trade the markets. That's why we trade the charts, not our opinion. Speaking of that, let's get into our economic data. Well, what did we have that the markets really loved? The CPI. Now, year over year was expected to drop. Well, we were expected to go from 4.9 to 4.1, obviously, and we went to actually 4 flat. This was last year. At this time, we were at the all-time peak, inflationary peak. It was the highest we've ever seen it in a long, long, long time, probably since the 80s, I believe. Now, month over month is a little bit more impressive because the expectations was to drop at 0.4 to 0.2, which is a lot, and we dropped a little bit lower. So yes, it is going the correct way, and this is an absolute indicator of one of the big ones the Fed looks at for slowing inflation. So we have this PPI that came out, and I think it's, I don't have to think, it's right in front of us. Let's take a look at these numbers. Now this is a little bit aggressive. This is what I'm talking about. So 0.2, negative 0.1, so it's not too big of a drop, but we came in at negative 0.3%, so this is starting to fall a little faster. Now, usually the production price index will fall or change quicker than the consumer price index. It's usually the production slows and the consumer slows, so on and so forth. But this is a little bit hotter than expected, but it's still going in the right direction. Today, definitely the Fed is expected to not increase. Rob said on Friday's class that the Bank of Canada and I believe the Eurobank actually both increased, even though they said they weren't by 0.25%. Will the Fed do that? Yeah. I'm going to go ahead and show my hand here. I don't think the markets give a crap. I don't think they care. I don't see us doing anything but just going straight up. Whether it's a blow off top just for a day or so, and then we fall apart or pull back, I should say, Friday or into next week, something. I just don't know how these markets don't continue higher. That's my 2 cents. Now that I've explained that, let's see what you're thinking out there. Let's talk about the weekly direction first. All right, we're taking a poll. 30 seconds into it, 81% voted very quickly. 100% voted. Cool. Close and share because now that I'm looking at it, I might be a little bit more bearish than I need to be in the shorter term. So we're 63 plus 119, 0.19% negative 1, and 13% plus 2. So definitely a plus 1. And I have to agree. And let's see what you guys are looking at longer term. Cool, 100% voted immediately. Wow, awesome. Let's close and share this. And definitely a plus 1 to a plus 2. Okay. Plus 1 to plus 2. All right. On that side, I think we agree. So that's awesome. Great stuff, guys. Thanks. And let me catch up with you. Oh, sorry. I forgot one more thing with the economic data, but not much to go off. Empire State Manufacturing might be interesting. This is all going to take a back seat. Retail sales, to me, I think is going to be interesting. Look at this. Goes from positive to negative. This goes from a huge negative to a little bit negative, which shows a little bit of balancing out, and then unemployment claims. So I will be watching these numbers just for curiosity, but I think the market powers through them unless they're way off. Okay, forgot it. I wanted to go one more slide. So let me catch you up. -1 for the week. Now I know you guys are +1. I should be +1 or 0 because I do think we get that last surge. If the last 2 days have really just bared me up, if that makes sense. The slopes up, moving averages are great above, but you guys know that I take a huge negative factor on extension. So this whole move, well, I shouldn't say this consolidation, but the last 5 trading sessions, four trading sessions, have really moved me off of this number to knock down because it's extended. So I'm just expecting a little bit of a rubber band. I will actually, I'll say it again, I've said it many, many times, many classes before, become more bullish. Here is where I will go to a +2. It's because it's bounced off, it's set a higher high, and it's within its trend. This will stay at a +2, maybe even a +3. I can go to a +3 at that point. That's fine. That's kind of how I score. And it has a lot to do with where price is at moving averages within a trend. All right, blah, you've heard that plenty of times. Okay, so sector analysis. Strong is tech, weak is energy, and not by much. This is Wednesday to Wednesday. Technology just jumped ahead again. Consumer cyclicals, basic materials. You guys see it all. Energy, a little bit of a slowdown. I wonder if a lot of that has to do with just the price of gas. The oil's moving lower. The Saudis opened up their spigots a little bit. Oops. Oh man. All right, who's ready for conspiracy theories? This is my favorite. So Biden went to go see the Saudis just recently, right? Okay. I think he went down and told the Saudis that he would make the PGA merge with Live Golf if they opened up the spigots. You're welcome. I've told that to my friends and it just blew their minds. It was hilarious. Anyways, if you're ever bored and you're not trading, you can come up with fun conspiracy theories. However, these charts are what they are. That's a beautiful extension in the tech sector. I think it is definitely overextended. We're due for some sort of correction or even a pullback. That's fine. But I don't want to get anywhere near this freight train. It is moving real fast. So, yeah, let's just stay out of its way. Energy, on the other hand, is looking pretty good. Let's go back to or I should say looking pretty decent or weak for a bear trade. I'm trying to figure where the 7th is, somewhere around here. It looked like it was going to roll over. Had a little bit of a push-pull here, you can see about 6-7 days ago. And then it's hovering around that 50-day moving average. The moving averages are correct for bearish. It's sideways to bear, and it's been there for quite some time, regardless of the move that it had off the bottom here in June. It's still well within its range. Kind of fun. All right, let's get to our conclusion, and then we'll go out and take a look at some trades here, guys. Fed days are usually super fast with this class. We don't have a lot to do, just kind of talk about the obvious and then just be leery or aware of what could happen moving forward. So the markets are strong upward momentum. Yes, I'm still calling this a blow off top. I have for a couple of weeks. And the further away they get it from the moving averages, the further away the moving averages spread away from each other. That's called a surge. That's extension. You guys have taken Charting 101. That's exactly what this is. The rubber band is stretching and stretching and stretching. However, I'm not going to get in the way of that thing until it snaps. So bears, keep out of the way. Don't get cute. Don't counter trend trade. Don't guess tops. You're going to get slaughtered. Bulls, be shorter term and or target oriented. I have a hard time being +3 because I don't want to buy something July and August. I just don't because of the ability for this rubber band to snap. This puts me in a very precarious situation to where I'm super chicken to go in either direction. And if I do go bull, I might be cutting my gainers, right, very quickly, which is fine. This is not a market I'm conducive to trading. So I understand my weaknesses. So be shorter term and or on target oriented, meaning, hey, if this thing hits $3, I'm out. If it surges to this resistance area, I'm out. So be looking for something that's easily adjustable. Targeted butterflies work. Straight calls, if you can afford them. Vertical spreads over a 2 or 3 week process, not a good idea. Credit spreads, going to be not a good idea because you still have to wait for that time frame. So be short, be quick, be fast. So all in good news might create a pullback. All right. If we get everything the Fed's not going to raise, the Fed's going to stay dovish. They think we're going for a soft landing, and all the good comes out of today, and we continue higher, the markets will at some point be fully vested, meaning investors will have all their money in and they'll be comfortable with it, which means there's nothing else to do but take profits and for these markets to fall or correct. So it will be a profit-taking round, or it will create that scenario. In fact, I read an article before this class saying that, hey, a good news could start a correction, right? It's when everything's great. What do? Well, we got to go down. So don't mistake this for a major market crash. I showed you the Q's chart for a reason. It's not going to be the end of all days and we're into another bear market for the next 6 months and here comes the end of the world. None of it. It's just going to be a very aggressive, volatile, scary-looking correction until it's not. I imagine it'll be a few weeks before we actually can identify that. We're going to get a bounce, then we're going to get a rollover, so on and so forth, but hey, we'll talk about it. Bullish and confident. Sentiment is absolutely confident. They've been proved right since the beginning of the year. Inflation is not a big deal. Yes, it is. Well, actually, it wasn't. We're going to come off of this. We're going to come out of this banking crisis. Well, we might not. It could be peeling back the onion. Actually, we did. Well, corporate profits are going to be horrible because they're expecting a slowdown. Actually, they weren't that bad. Some missed, but everybody still loved that AI craze and jumped into it. So these markets have been proved right. The more they're proved right, the more confident they will get, and the more aggressive they will be in the bullish direction. Get out of the way. The markets expect no action from the Fed. I believe we push higher. There is my guess. I just wanted it for fun. I think we push higher regardless of the Fed's outlook. I think these markets absolutely ignore it until everybody that wants to be in is in. And we're seeing that. We're seeing that over the last couple of weeks. There it is. I could be completely wrong. Watch us go straight down. Which is fine. Which is fine. All right. Let's go out and take a look at some trades. We are sideways, kind of hovering around. Kind of what we expected into a Fed meeting. Let me get into some trades and some conversation. Justin's got a trade he put on a couple of weeks ago here. An out-of-the-money fly on Apple. Is that correct? Let's see. 2 weeks ago I put on 185 midpoint. Oh, look at you. That is amazing. Great work. Playing the bull side. I'm going to zoom it down here because it's a little easier to see these numbers. A couple of weeks ago, shot that 185 target of this high. It expires, what, day after tomorrow? Wonderful. Just took it off for a solid winner. Great work. Wanted to take it before the afternoon. Justin, absolutely. Targeted butterflies are fabulous. He took it off probably because of an event. You were already there. You're almost at that point. I mean, you're 90 cents off of it. Actually, earlier today, you were probably very close to it. What was the high? 184.38. That's what I'm talking about. That's exactly what I'm talking about. Go for it. Take a target, whether it gets there in a week or gets there as it expires. That was perfectly played. Great work, Justin. Jeez. So proud of you right there. I'm jealous as well. Okay, excellent. Let's That's kind of what you do with these. That's exactly what we should be doing. Thanks for sharing. Okay, bear pattern and how in CVX or XLE. Let's take a look at it. And these are going to be pretty easy, right? Because they've been hurting as of late, just recently. CVX, which is Chevron itself, or the whole energy sector. And we'll pull up the energy sector again. They're very similar, aren't they? This one's going to be a little bit more volatile, more specific to it. So if there is some weakness that you see in Chevron, Scott, or something that you think that as a company that they might not make, it should be a little bit more volatile. So I imagine it should roll over and fall faster because it's susceptible to itself. Boy, I hope that made sense. XLE might meander and hold because it does have some. It could be following a few stocks that are actually outperforming or that are actually strong. Both, I think, are very good candidates. Both make more sense. XLE, a little bit less expensive, a little less volatile. I mean, I guess expensive is relative depending on the shares you do or the contracts you buy. Let's go back to Chevron here. Yeah, $150 versus $80. I'd be fine with either. I might prefer the XLE, and the only reason being is just because I can play it. Oh, whoops, I went too far back. I can play it a little. I could play it to the slow side if indeed these markets start to roll over. One thing that I'll have you just kind of kick around in your head, if the markets indeed roll over and they roll over aggressively, like I say, it's just a pullback, do these bounce? Does the energy sector move higher? I don't know. Right now it doesn't look like it. But if we stay on this kind of a sideways move or this surge to the upside, maybe we consolidate and then surge higher, then yeah, I think this will continue to roll over. If you want to be super safe, I would wait for that 20-day moving average to break. Today looks really good in this as far as the candlestick goes so far. Let's take a look at a buddy of theirs. ExxonMobil's been back and forth on the bear watch. I like this one as well because it's below the 20 already. You can see that. And it's got a target here of 102. Man, that might be a happy medium, depending on what you want to do. And ExxonMobil was, Corey looked at that one yesterday, 2 days ago. So, something to look at. Thanks, Scott. Okay, we're going to take a look at Micron Technologies for Felix. He's got a diagonal call, 67.74. Yep, 67.74. June 23rd, okay, so we're not going too far. If you want to be longer in term, and this is the, what was that, the June 23rd, okay, so next week and a half, that's fine, and it's the bull side. I'm okay being a little bit longer term on the bull side. Boy, actually, I don't know. Okay, I like it. I like the target. 74 here, sold, that's a good one, 67. Just below. That's fine. I'm fine with that. Let's put it down. Oh, where'd it go here? Yeah, there it is. Lost my post-it note for a minute. Oh, call spread. Oh, he said, oh my. Oh no. Call spread. 67.74 vertical call spread. Okay. So the diagonal spread threw me off a little bit because if you're selling the 24th, that means you're buying deeper. I don't like that. But if the whole thing expires on the 24th and it's a vertical spread, I'm okay with that. It's a week and a half. I'm going to throw something out there for you, Felix. What do you got here? 67.74. So somebody help me with my math. $4, $5, $6, $7 out. Could you go 80, 82? Targeted butterfly. It'll change your life. That way, if it gets to 74 tomorrow, you can take it off. Because if you do the vertical spread and it gets up to 74 tomorrow, you'll make 20% of your max gain. Go ahead and buy the 81. Turn this into a 1x2x1 targeted butterfly spread, and it'll make your life much easier. I'll keep an eye on it, though. That's why. Because if this... hey, the markets do good, like they do what we expect. We think they're going to surge off this news, and they do, and this thing goes to 72 to 73. You can take half that off. You'll also notice it's going to be a whole heck of a lot cheaper. So now you might be a 2x4x2. You can take half off. Then if it falls apart or doesn't do what you want, you're not stuck at that 24 or 23 expiration cycle. My 2 cents. I'm telling you, man, sometimes it's just so much easier to do, right? So much easier to do. Okay. Or, I mean, there's easier things to do, easier strategies to do that will allow you to be a little bit more mobile. Like I say, I'm a big fan of the vertical spread, but I got super, super frustrated because everything depended on that Friday. Everything. And I just got sick of it after a while. All right. Thank you for sharing, Felix. I like the chart. Okay. Oh, sorry, guys. Did I only have one choice on the poll? The poll wasn't it multiple choices? Maybe that's why you guys talked to 100%. I gotta have to fix that poll. Okay, I'll double check it. Thanks, Dan, for the info. It was multiple. Okay, maybe one wasn't. We'll see. All right, I'll triple check it. All right, what do we got here? One more for Felix, and then we'll move on. I saw 4 or 5 options. Yeah, I selected multiple ones for. Okay. Looks like it was okay for everybody. I'll double check it just in case. Google diagonal call. Let's get to Google here and the diagonal call for Felix. Oh, thanks, Dan. I'll check that monthly. So taking a look at Google here, we have a diagonal call 124, 128, 14th, June 23. You could take these all the way off if they hit your target, but let's take a look at it. This looks a little bit more sideways, which I do like diagonal for. 124, 128, not going too high, right around there. Okay, so you're playing within a range. Let's put that, I'm going to put that on the bull with a sideways arrow. So guys, get creative. You don't have to do the diagonal here. You could do a calendar spread. Anybody do a calendar spread lately? Just do like a 125 calendar spread. Take those same dates, go 125, 125. Or if you want to go slightly out, 128, 128. I always gravitate back to the butterfly, but there's plenty out there. It's a good chart. Thanks, Felix. At my target at 88, where do you see the target? Felix on L. Geez, I might need my glasses. Is that LYV? LYV. Let's see if it's 80. Yeah, that's about right. Okay, so I've got the $80 call. I'm thinking of selling it at my target of 80. Okay. You'd better. Okay. And here's why. It's your plan. It's your plan. You've got the 80 call. You got a target of 88. And the answer is you better sell it at 88. Where do you see the target? And he gave me a happy smiley face. I go, well, don't get greedy. My target would probably be about 85. Now, if I drew some fibos on that, maybe I could get up higher, or maybe a channel off this bottom, right? It'd be a pullback, probably right where it's at, 87, 88. That's sure. And if you've got a few here, Felix, it's always fun to play with a winner. You could just take half. You could put I would not put a protective stop on it. They don't work with options. Has anybody tried? There's a big step between a stop that targets and triggers a combo order or an order to sell an option. It's one extra step. Best just to sit there and work your way out of it. So, yeah, just take half, let the rest ride. But if your plan is to take it once it hit 88, follow your plan and take it. You can always get back in later. Great trade. All right. VALE for Robbie. Moving along here. What do we got? $14 call expiring June 30th. Target of $15.70. Ooh, that's very specific. Okay, maybe this gap. Okay. It's above its averages. It's moved above. It's definitely showing some strength. Pretty aggressive target. I see 15 as a resistance. You see this back here at March, beginning of April. Maybe play that up to 15. Yeah, expiring on the 30th. So you do have some time. Yeah. He's got a +3 move in it. Okay. Well, yeah. Well, if you're in it and your target's up there, go for it. Play it. I understand you might run into a little resistance there. I don't know how many shares you have or how many contracts, excuse me, Robbie, but Yeah, play it there and just let it go. It's in a good situation. Usually I'd say, hey, this is kind of counter trend trade, but it's not. It's actually above its resistance. It's not a very. I'd call it like a +1 at most, just because the moving averages aren't right. But I do like the price action. I do. So let's watch that one. I'm just gonna put it down here because I want to see where it goes. Thanks, Robbie. Bearish on GIS. Okay. But they only have monthlies. So long July put with a, and then Garth, I think you said something a little further. Changed my mind. Life targeted butterfly GIS. July butterfly 82, 78, 74. Okay. So he had a first comment on GIS, but let's go to your second one because it looks like he said, "Oh, I changed." Thinking about a butterfly. So target at 82, 78, 74. Let's zoom in here. Yep, I love it. Love it. Yep. 82, 78, 74. Right back here where it found its floor back in March. And he only has monthly expiration choices, so he's got to go to July. Doesn't make a difference. Now, it will hurt a little bit being out in July if this thing goes down there in 4 or 5 days. Sure, but it's nowhere near what a vertical spread would be. And the reason being is because you have the gain in the 82 put added to the depletion of the time of the 78. And you could sell it as a high volatility. If it goes down to 78 stops, ideally with these things, you want it to go a little further and then retrace back up to 78, because what ends up happening is when it goes back up to an at the money, it loses a lot of extrinsic value, but the 82 that you own has very little extrinsic value in it. It's all intrinsic. So you'll find that when you get an action of this butterfly, well, first of all, let's start it here. It was, I'm sorry, 82. It was 82, 78, 74. So as it goes down to this point, this is increasing a lot intrinsically. This is increasing a whole lot because of extrinsic. But let's say it comes back up. This move here destroys this. This will lose a lot. The 78 loses a lot. This loses a tiny bit because it's just a little bit of intrinsic that it lost. That's ideal. So if they come back up here, this would be a great place to cut it or take half. Just a little Butterfly 101 for you guys. You're welcome. All right, let me put it down because I do like it as a bear. GIS. You know what was hilarious, folks? I loved General Mills as a bull right through here. I loved it. It was on my bull watch forever, and then look at this. Just bye. Anyways, it happens. Okay. Let's go on to... Oh, I got to go back up. James got TM below off top. And he says, haha. Let's see. Toyota Motor Company. Not at all. No, that's fine. That's the sustainable move. Go ahead, just buy that right here. Now, these are kind of some of the things that I've been seeing jumping around. It is really, really weird. It is really, really weird. Monthly only also. Okay, cool. Oh, Robbie's got one more, but this is a market that's bullish. Delta Airlines. This was our sideways stock, folks, for a long, long time. Remember, we had that nice channel. Look at that. Love. Just the last few days. Bear just straight up. American Airlines. So the expectations of an economic recession or a slowdown are zero when it comes to this. What was another one? Las Vegas Sands. Oh, no, it was MGM. Sorry, excuse me. Airbnb was a great one, by the way. Job Mesman last week. So, I mean, I'm seeing stuff coming off the bottom. Travel, especially. Toyota's an interesting one, but the expectations of a consumer slowing down in the summer are zero, at least market-wise. It's pretty cool. So, all right, we'll take a look at one last one, and I'll cut you guys loose to go stare at paint drying. Which is the Fed. Looking at an XLE 79, 82, 85 butterfly. Okay, cool. Let's go back to XLE one more time. See if we can't beat down that energy sector, or yep, energy one more time. And we've got, let me draw the lines. 79.82.85. 79.82.85. We're going right at it. Yep, he's going to play that 50-day moving average. Cool. I'm fine with that. Let me put XLE sideways. I'll put down on it too, but since it's a sideways trade, that'd be fun to look at. We'll follow it along with you, Robbie. Excellent. Cool, guys. Thanks again for the participation. Super, super helpful. So I made a call. I'm wrong a lot, just to let you know, and I've got no shame in it. But I just think that the markets take off, whether it's this last little blow off or not, or it's just another surge that gets corrected. We'll see. But it just seemed ready to go. That last ditch effort. You know, the people that are late to the party. Uh-oh. Thanks for the participation. This is VALE. This has earnings on the 30th. I believe Robbie's going to play this as a jump to the upside, about just shy of $16. XLE, down, slightly neutral to down, because I do like where the butterfly's parked on the 50-day moving average, but if it rolls over, it's also on my bear watch as well. Okay, killer, guys. Thanks so much. I appreciate that. So that's it. Enjoy the Fed meeting. I will be not watching it. I'm just going to see the aftermath after I go have lunch. So thanks again, guys. We'll talk to you next time. Bye, everybody.